what are common problems in a sales tax audit? So we've done a lot of sales tax audits in our firm, and I can speak very generally about some of the problems that we see most often that our clients encounter or that we've encountered through the course of dealings. So problem number one is the majority of people who are underreporting on sales tax for whatever reason or another don't do enough to cover their bases. Well, that seems fairly silly. It's really true. The biggest way that people get nailed for sales tax audits is by data that doesn't match. So what happens is when you file a sales tax return, that gets reported to CDTFA. And then in the evaluation process to determine whether they're going to audit you, CDTFA is looking not only at your taxable sales and your total sales, but they're looking at your federal income tax returns, and they're looking at the information that was reported on your 1099-Ks and any other publicly available information that they can find. Or not publicly available, but available to them. So IRS transcripts, so on and so forth. So the biggest problem that people have right off the bat is sales tax returns and federal income tax returns not matching. You're reporting a lower or higher amount of sales than you are on your federal income taxes. So when you have those situations, you're probably going to get audited. There may be a natural explanation for it. You may have labor built in there. You may have sales that were not in California. You may have exempt sales. There could be a variety of reasons. But the problem is that we see with clients is that clients fail to match their data, and or they go in the audit without a proper explanation for why their data doesn't match. Number two, the big thing we see is invoicing. We see more mistakes on invoicing, and it's so hard to build a narrative when you don't have invoices that support what that narrative is. And a lot of the mistakes that we see on invoicing are benign. It's people not separating shipping charges properly, or people not accounting for time and material costs, or billing things individually. They're just really simple mistakes, and the problem is look, I get it. In a normal course of business, when you're doing your invoicing, the last thing you're thinking about is a sales tax auditor going to look at this, and how are they going to look at this, and am I reporting sales properly, at least from an invoice perspective? But it makes a huge difference, and I can't tell you how many situations we've had to dig clients out of by saying, look, their invoicing doesn't accurately reflect what's going on here. It's a real big problem. So there's not enough screening of invoicing going into the sales tax audit. Number three, by far the biggest mistake we see is people operating under the false assumption that because I pay all my sales taxes, I'm not going to have any problems. I can't tell you what a big fallacy this is because of the way that sales tax audits work. Is people naturally assume because I'm doing everything correctly, I'm not going to have a problem with the auditor. And the problem with the sales tax audit is there's too much data there. So always go into a sales tax audit thinking that you have a problem, because you do have a problem. You have an auditor who's going to look over your books and potentially make a correction that might not be in your favor. So those are the three classic mistakes I see clients making with sales tax audits, and that's the biggest things I would say urge you to correct ahead of time. Again, sales tax audits are best handled by an attorney. We screen a lot of these issues out ahead of time, but just so you're aware, those are the things that kill the clients the most.